Hi guys, given that we've already gone live and then had a minor technical issue right at the critical moment when Brian was going to introduce this event, I am going to be one of the participants representing EqSeed today and talking a bit about the Brazilian market. I'm also going to jump in now and do Brian's introduction so that whilst he gets back online. So we're incredibly proud and pleased to be hosting this today with some of the really biggest names that have contributed to the success of the successful development of the equity crowdfunding market globally, as well as in Brazil. And I'm not going to introduce them myself. I'm going to allow them all to do so in just a minute's time. So just as a bit of background, starting with here in Brazil, over the last 6 years, we've seen the emergence of the equity crowdfunding market. And we've seen a real successful story of initial growth. So, we've seen since 2014 an increased amount invested by the platforms, increased number of rounds, ever larger rounds and ever mature companies using this model to raise funds to finance their growth. And we've seen all that with no instances of fraud and with very few instances of compliance issues with the regulations. It's been really can be considered a huge success. Part of the development of the market, and really this market we see it as incredibly important here in Brazil because companies here, startup companies, early stage companies, they really suffer with the lack of access to capital. So there are very few active angel investors in the country, and you can count on one hand or the maximum two the number of active venture capital investors that really make investments and meaningful investments here in Brazil. This market comes to fill a very large gap and very important part of the market where companies don't traditionally have very much access to equity capital, and the access to credit that they do have is extremely limited and also extremely expensive as well. So despite the success of the Brazilian market initially within these first 6 years, the reality is that if we translate the values into Brazilian reais, the UK market is currently around 120 times the size of the Brazilian market. And in the US, the Reg CF market alone, which doesn't include other regulatory ways of raising capital online in the US, is already 20 times bigger than the Brazilian market. So that was the inspiration for this event. And the international participants that we've got here with us today was to ask that question. How can Brazil replicate the success of equity crowdfunding that we've seen in other countries globally? So I'm going to pass to each of the participants now, including myself, but I'll go at the end for a smooth transition there. I'm just going to ask each of you, just by means of introduction, just to talk a little bit about yourself and how you actually became involved in the equity crowdfunding market in your country. And if we could try and limit the answers just to around 2 minutes at the max. Just to serve as a basic introduction. But we'll start with Jeff Lynn, who is the founder, former CEO, and now executive chairman of Seeders.
Great, thanks, Greg. Hello, everybody. Very, very big pleasure to be here. So as Greg says, my name is Jeff Lynn. I co-founded Seeders, starting work on it in 2009. Seeders is one of the two largest European equity crowdfunding platforms. We've had just short of about £1 billion invested to date across about 1,100 companies, and continue to grow quickly. I've also been involved in various sort of formal and less formal capacities in the shaping of regulation, both in the UK and now at EU level. It's an area of great interest to me. I'm a big believer in equity crowdfunding and its potential, both for the entrepreneurial ecosystem, but also for providing investors with choice and opportunity. And it's great to see other regions of the world seeing so much success as Brazil has begun to, and with such potential ahead of it. So great to be here. Thank you very much.
That's great. Thank you, Jeff. And Woody, Sherwood Nees, who is partner at Crowdfund Capital Advisors in the US, and known to me as Woody. And Woody, could you talk a little bit about yourself as well, please?
Sure. Hey, it's great to be here. Thank you so much for having me. It's an exciting time, I think, for crowdfunding, equity crowdfunding in particular globally, because I think with the markets moving in such volatile spaces, people are looking for other avenues to invest their money. So I think this is a great opportunity in all of our countries right now. I, entrepreneur by my background, had started a company where we flavored medicines for children so they're more compliant. If you go in a pharmacy here in the United States, kids get to choose whatever flavor they want their medicine to come in. And every time a kid took their medicine, the next phone call I got was a mother saying, how do I invest in your business? But because of these securities laws that protect retail unaccredited investors, you're just average Joe, they couldn't invest in our business. And I was always frustrated with that. And so, of course, we had the last economic crisis in 2008, which always leads to opportunities globally. Right now, I think this is a great time for an opportunity. Two friends of mine and I said, well, if the capital market seized up, why don't we then go about changing these securities laws and bring them to the internet age? And so we brought the idea of equity crowdfunding to Washington, spoke to the SEC. They pointed us over to a building with a white dome, otherwise known as the Capitol, and said we needed to talk to the people over there. And naively enough, we just started walking the halls of Congress, believe it or not. It didn't matter if you were a Democrat or a Republican. We just wanted to talk to people who were interested in helping create jobs in our country and helping support startups and small businesses. And believe it or not, the White House heard. They sent a letter of sort of recommendation for what we were doing. We've testified in front of 5 U.S. House and Senate panel hearings. It was very Hollywood-esque. And we were there as it passed the House 407-17, the Senate 73-26, and we were invited to the White House by President Obama for the bill signing ceremony. So it was, just a huge accomplishment. There were plenty of us involved. I want to put that out there too. I mean, we showed up. I think a lot of people were mentioning the same thing too, but it's great to see how this is turned into a viable industry, and one that now Bloomberg, as of yesterday, is starting to cover here in the United States.
Fantastic.
Yeah, that's very interesting. Brian, it was absolutely seamlessly taken over, if I do say so myself. So we've had the introductions of Jeff and Woody, and now I can pass it back to you to lead into Antonio Carlos, if you could.
Oh, well, thank you very much. And I apologize again. And we have an expression here in Brazil, Lady Murphy. And so sometimes the internet connection here can be a little bit unreliable, but we push onward. So Antonio Carlos, if you'd like to give us a little introduction of how you became individually involved in the equity crowdfunding market here in Brazil, that'd be wonderful.
Okay, thank you, Brian. Good afternoon, everyone. It's a pleasure to be here. First of all, I would like to thank Greg, Brian, Gabriel, and all the EqSeed team for the invitation. I would also like to salute my fellow panelists, Jeff Lynn and Sherwood Nice. It's a pleasure again to be here and share my thoughts on the equity crowdfunding ecosystem in Brazil. We have been working together since the beginning in order to develop this market here. It has been a short time since our rule was enacted. We certainly have come far, but we still have a longer way ahead of us. I have to state that the ideas and comments presented here are my own and do not necessarily represent CVM's view on the matter. Well, I first got acquainted with the whole crowdfunding idea when a high school friend of mine was pitching in for his music album through a Brazilian platform. It was not equity that he was selling, but the product itself. But having the mind of a securities regulator, I thought instantly that it was just a matter of time for this idea to come to our market. After a short time, we started receiving many interested groups in the commission, intending to establish an equity crowdfunding platform in Brazil. At the time, I was the assistant director of the Office of Market Regulation within the commission, and being an innovative person as I am, I took the lead in the regulatory discussions that resulted in the enactment of our rule CVM 588. Personally, I felt and I still feel that equity crowdfunding is a fantastic way to bring our capital market accessible to small firms and give unique investment opportunities to non-sophisticated investors. And as a public servant, it is rewarding to observe that the rule has contributed to so many capital raisings that resulted in the creation of jobs and wealth in our country.
That's fantastic. Thank you so much, Antonio Carlos. I'll pass it over to Greg now to give a brief introduction as well.
Yeah, thank you, Brian. So I already, thanked all the participants when I stepped in there at the beginning for Brian, but I'd just also like to say hello and thank you to everybody that's listening and watching this event today. And really, we're doing this event to bring the best international practices to Brazil, so that as a market we can look at how we can really replicate this enormous that's been realized abroad. So my personal story in connection with the market, I studied mathematics at the University of Nottingham before starting a career in banking in September 2008. So exactly the month when Lehman Brothers exploded. I'd actually moved house from Nottingham up to Edinburgh, and in the 2 months before I was due to start work, I went to visit them and told me that there might not be a bank there anymore. So that was a little bit of a shock to a young professional entering a first job. After a year in Edinburgh, I made my way down to London, where I spent most of my time at Lloyds Bank in the capital markets team, so structuring securitization transactions, both for Lloyds and external clients, so large asset-backed bonds backed by retail mortgages and car finance, so it's car finance and also special bonds in the UK. So I was focused on structuring and execution of capital markets transactions at that time. At the same time, I've always had a strong personal interest in equity specifically. I think as a mathematician, what I really like about equity is that it can never be described as purely a science. There's also a part which is an art. So that's always been something which on a personal level interests me. And whilst I was working there in Lloyds throughout, down in London, I was there from 2009 to 2013. And I began to see and actually began to follow very closely the launch of guest business of Seeders and also of Crowdcube, which is today the other major platform in the UK. And I just immediately saw a huge potential in this model, specifically in the UK. I didn't know so much about Brazil at the time, but in the UK we have a very strong equity investment culture, which goes back to the privatization of public companies and equity. So everyone in the UK knows what equity is and what the form of returns are, etc. And so I just saw this huge potential for the model there, and I thought this is going to be really big. And then during the next months and years, as I was studying the model, I really realized how similar it was to the capital markets team in which I was working and gaining experience. So that really started off the idea of potentially wanting to become involved in this market. And there was one moment in particular that I remember when I was there walking through the office, and I see a group of investment bankers there with Seeders site open on their computers and saying, "Have you seen this? Have you seen this company?" And that was the moment when I just thought, this won't stop. This is really going to take off. So those factors all came together with a series of personal factors as well. And I decided to leave the bank at the end of 2013, did a little bit of traveling, and then arrived in Brazil at the beginning of 2014, already planning to try and enter the market and bring the model to Brazil, and already trying to learn Portuguese, reading the existing regulations of the CVM. And that's where my connection story with this market starts, Brian.
Fantastic. Thanks a lot. Well, I think after the introductions, I think as I think was already stated, this model has been incredibly successful abroad, and it's shown really good traction here in Brazil in the initial stages. But we're still a bit of ways behind the UK and the United States. Greg may have mentioned when I cut out that the UK market is about 120 times the size of our market here. And so I'd like to understand perhaps from the different participants a little bit of the history of how the markets got to where they are today, reached these levels of success, and kind of the key moments and milestones. Jeff, do you mind if we start off with you?
Gladly, yeah. Look, I mean, I think like the development of any market, it's always a confluence of factors, and it's very difficult to say that there was one sort of shining moment in it. But I think I would probably give, 3 or 4 kind of key points in the early days that probably led to the early development of the UK market. One was regulatory. The fact that actually even before we had a bespoke crowdfunding regime, which came into force here in 2014, the general regulatory regime that applied to securities offerings, including private securities offerings, was flexible enough that it allowed platforms like Seedrs to work within it. And I think that was a really big thing because although it did contain some restrictions that have since been modified and tailored more toward what we're doing, it meant that we were able to start with under a regulatory umbrella. And I think that has been a critical thing for us relative to some countries where either people had to start outside regulation, and that always gives concern in terms of trying to bring investors into the fold, or you spend your first some years lobbying for regulation. And I know one of the challenges a lot of friends in the US faced was that it took, Woody and others did such an amazing job getting that regulation through, but even when the Jobs Act was passed, it was another 4 years before the SEC implemented rules around it, and a lot of people waited a long time for that. So the fact that we could kind of start from get going from a standing start was very helpful. I think the second thing was that we were we very much managed to fit what we were doing, into part of an emerging tech scene. I think there was a lot of excitement here, generally from the Prime Minister David Cameron on down, about the UK's power as a potential tech startup powerhouse. A lot of the time still feeling a lot of inadequacy feelings versus Silicon Valley and all. And for the first time, there was a real sort of sense that we could build some really world-beating tech businesses. And we have. These last 10 years have been amazing in the UK and in Europe generally. We've gone from a point where really there was only one unicorn ever to come out of, in modern, in sort of standard, current terminology, one unicorn to come out of the UK in form of Skype, to now we have, dozens here, dozens more across Europe. So, we sat within a sort of rising tide, which was very, very helpful. And then I think the third thing is that this is not unique in any way, shape, or form to equity crowdfunding, but there has long been a very generous tax relief scheme for investing in early stage businesses here. It's called the Enterprise Investment Scheme, and they added to it something else called the Seed Enterprise Investment Scheme. It goes back to the early 90s, but it was always a super niche thing because it really only applied to the limited number of angels and private investors who were investing offline or through particular kinds of funds. But what it did was it gave people a level when a proposition like Seedrs came out there and we were inviting investors to sort of give a chance to this new idea of investing in early stage businesses. It helped de-risk it a bit for them. I don't actually think you need a tax relief scheme to be able to have a vibrant early stage investment or equity crowdfunding ecosystem. I think the US is proof that with certain state release, but limited limited relative to what the UK has, you can still have a massively great early stage investment scene. But when you're trying to persuade people to adopt a whole new form of behavior, invest in a whole new way, that was a nice little kicker having that in place. So I think those three factors certainly all helped. And then there were some individual milestones along the way, individual deals, individual successes that started to help success breed success.
That's fantastic. Thanks for that summary. Woody, would you like to jump in and give us a little bit of your perspective?
Yeah, so we've had the opportunity to work in 44 countries around the world right now in terms of helping governments understand the policies that exist globally for crowdfunding, equity crowdfunding, and debt crowdfunding, and what are the, what we think are best practices and what we wouldn't do based on what the United States has done. We always point to the UK as the leading example of how we think the industry should evolve. The US is highly prescriptive in how we came about with our regulation. The reality is there was no way we were going to get the government or the SEC comfortable with, trust us, the market will evolve, there will be no fraud, and everything will be okay. That just, we'd love it to be more like the UK that way, but that wasn't an option. So we had to create guardrails. We had to create an entire sandbox of how this would work. And that's what we went to Washington with, because we knew if we had a framework for what we could do based on what exists in the current marketplace for how startups and small businesses raise money under the existing exemptions, but allow for retail investors, but cap their loss if there is going to be a loss. We knew we could usher that through. And I think that's one of the reasons why we were able to get this legislation through Congress and get the SEC slowly comfortable with it. I know, so we worked really closely hand in hand with the SEC, and people give the SEC just horrible, horrible reviews. But quite frankly, I think these regulators are in a tough spot where they see technology and they see the benefits of it, but they also have the goal, the responsibility is, you know, monetary flow, but protect investors. And, you know, in many cases, those are conflicting things. And so we needed to help them see how we could protect investors. And we got there, and I give them a ton of credit for thinking creatively out of the box when this is not comfortable for them. But the industry was slow to adopt here in the United States. There was a lot of critics that said it was too slow. And our response was, I'm thrilled that it was very slow and methodical. Because for instance, this last month, we had 121 new offerings just in the month of July in the United States. That's more than the entire first year that there was for regulation crowdfunding here in the US. I think we're at a tipping point right now. We don't have market awareness. Hopefully that changes with, you know, Bloomberg coming in. And I think that's the thing where people just don't, you walk down the street, you always tell people, you know, you want to crowdfund my business, they're going to look at you and say, well, what are you talking about? So there's still a lack of market awareness, but we've gone from, you know, zero to almost $500 million. The SEC is looking at reworking the regulations right now to increase the maximum you can raise from 1.07 million up to 5 million. There's been a ton of positive letters to support that. So we're waiting for them to take that up on their plate. And, you know, I think we're just at a really good time right now for a tipping point. I've written a few pieces where I say this year and our fiscal year for regulation crowdfunding begins in May, because that's when like Jeff said, it took 4 years for it to go from signing at the White House 2012 to going into effect in 2016. But I think, you know, starting June of this year, clearly we've seen where this is the year of the crowd. So I'm excited. We've had almost 3,000 companies register offerings. There's been over 250 that have done repeat offerings. And because all this takes place online, we've got all the data to show historically what's happening with these companies, how their valuations are increasing, and, you know, the benefit for both companies and investors.
Very, very interesting. Thanks, Woody. Greg, would you like to give a little bit of a background on the development of the market and the history here in Brazil?
Yeah, sure. So talking a little bit about that development and, you know, and the success of how we've achieved the success up until today. So, you know, our story kind of starts in 2014, and definitely the first factor that I would say was that, you know, we found a highly receptive CVM with the area of new regulation led by Antonio Carlos. That really was open to looking at new suggestions and innovations, and even to studying those innovations in detail abroad and looking at the best model. So that was something that I was incredibly impressed with when I arrived here in Brazil. I arrived, like anyone moving to a new country with a limited knowledge. I had several conversations at the time with contacts in financial markets, etc. in Brazil, and they said, "Hold on, you found a way to operate without a regulation, and you're going to go ask CVM for regulation of your market," and they thought that I was actually insane. I've always been an incredibly strong believer that to have a scalable and responsible and therefore sustainable market for a product that's high risk and long term and low liquidity, it is absolutely fundamental to have an individual regulation. We've been promoting that idea since the very first conversations. Our story of starting commercially is actually very similar to Jeff's, in that we found a few exemptions within CVM 400, which was the existing regulation for public securities offers in Brazil, which actually allowed us to operate this model for small companies. So that was absolutely fantastic. But it was a rather slow and bureaucratic process. We had to print out every page of all the documentation used in the round and take it physically to the offices of the CVM for it to then be reviewed, and then we would sit waiting for an approval, and that might come back in a couple of weeks, or they might come back in a couple of weeks requesting minor changes. So you can imagine that's not very scalable, and it was a little bit frustrating. But in hindsight, looking back, it was an incredible opportunity for us to actually get going in the market and to learn lots of lessons at a very small scale while we were doing one deal at a time, and also for us to operate in full visibility of the regulator. And that gave us huge leverage when it came around to talking about the regulation, because we'd shown the way in which we were operating, and the way in which we were, trying to grow this market in an extremely responsible way. So that kind of worked really well for us. From that moment, obviously the conversations about having a specific regulation started to go forward, and we were lucky enough to have, at the time there were only a handful of platforms in Brazil focused on equity, others on imobiliário, property development, and all of those platforms who are, have kind of professional founders with different backgrounds, and everyone was aligned that we needed a specific regulation for the market. So the platforms coming together, that helped us even more in promoting the regulation and developing the regulation alongside Antonio Carlos. Since the publication of that regulation in 2017, it's really just been a story of growth in the market. We've really benefited from positive media coverage. It's important to say that from 2014 to 2018, Brazil was pretty much constantly in a kind of horrendous level of economic crisis and political crisis at times as well. So we were we actually benefited in a certain way from that, because we were one of the only positive stories in the media. And I think that's very interesting, connecting with something that Jeff said in his response about, a rising tide of startups. It's really interesting that you benefited from a rising tide when you were launching a new business straight after the huge global financial crisis. It seems kind of contradictory, but we felt exactly the same here in Brazil, that we were somehow benefiting from being part of the positive story and part of the potential solution to the economic problems and slowdown that was being experienced. And then other factors in general, just to mention, that have contributed until today. So when I arrived here in Brazil, I think the basic interest rate was 14.25%. So you could basically leave your money on deposit in a bank and take very little risk, and 15-17% per year. And obviously that does not incentivize investors to invest in variable income products. And we have seen over the last few years a constant and drastic fall in the basic interest rates, which is now a huge factor in people having to reconsider alternative investments and putting part of their portfolios into variable income investments, which can offer them returns above the rate of inflation. And then alongside that, which is a global theme, but it has been especially strong here in Brazil in the last 4 or 5 years, we've seen a really strong migration of investors to online platforms. So when I arrived here, more experienced Brazilians always were telling me, you must understand Brazil is traditional, Brazil works this way. And although I agree with the vast majority of things that I learned from these people during this time, I actually think that they're incorrect on that. Brazil has adapted to being a digital-based society incredibly quickly. One of the great factors about this country is that when it likes an innovation and it likes a change, it can take that and it can adapt extremely quickly. And it can even be surprising for a foreigner who's here working the first time that you witness it. I think for me, Brian, that's the summary of the factors that really contribute to our success until today here in Brazil.
Yeah, that's fantastic. I think it's very similar to what Greg had mentioned, is that it's never just one thing. It is a confluence of events, and we've benefited from many. One being what you mentioned here, as we say in Portuguese, the desbancarização, that wave of people getting online and managing their portfolios online. And another being the regulation, absolutely, and that factor, the CVM 588. And more recently, the proposed changes to the CVM 588. We've actually just finished a public consultation period with the CVM, in which the CVM has proposed very significant and important changes that have a real potential to really expand this market in a very robust way. And I'd like now to invite Antonio Carlos, if he'd be so kind as to give us a brief presentation about those proposed changes and a little bit more on the CVM's perspective on this market and its future.
Thank you, Brian. The first thing I would like to point out is that our rule waives the necessity to register the public offering and the issuer with the Commission. Since the rule was aimed to small firms, all the regulatory burden is concentrated in the platforms. So the rule recognizes the platforms as a special kind of intermediary that is allowed to conduct the offerings that fall under the limits of specified in the regulation. So in order to design this approach, and since it was the first time the Commission was actually regulating the possibility of a non-registered issuer in a non-registered offering to assess retail investors, of course, the Commission had to set some boundaries. So it was already a groundbreaking regulation at the time. So in this sense, the regulation has three main limits that are now just only after 3 years under review. First, the size of the public offering, which was set at 5 million reais. Second, the size and kind of issuer that is allowed to raise money through the model, the crowdfunding model. The Commission established a cap of 10 million reais in total revenues and restricted the use for corporate ventures. And third, the individual limit, which was set at 10% of one's annual revenue, or 10,000 reais, whichever is bigger. So of course, now we are reviewing those limits. We haven't seen many offerings reaching the cap so far, but we understand that this might be caused by the restriction applied to the issuer size. So basically, we are doubling all the limits and tripling the issuer size cap. And the result that we are looking for is the enlargement of the number of firms eligible to issue through the platforms. Second issue I would like to touch on is the formal register of ownership of the securities issued with a third regulated party in order to safeguard investors from fraud and other misconducts when converting the notes into equity. Bear in mind the compliance costs. The regulation did not oblige issuers to contract this service when it was enacted in 2017. But since the market has been growing rapidly and taking into account the increasing of the limits in general and the possibility to conduct secondary trading intermediated by the platforms that also has been proposed in the public consultation, the Commission firmly believes that it is the right moment to introduce this obligation in order to take the development of the equity crowdfunding market here in Brazil to the next level. Alongside this obligation, this is very important, we have removed an irrelevant restriction allowing non-financial institutions to provide this service to the issuers that offer their securities through crowdfunding platforms. With blockchain and other DLT evolving rapidly, I expect and hope that the investment-based crowdfunding market in Brazil becomes a sort of laboratory to those technologies, allowing the provision of this service with an adequate cost for the issuers. Regarding the secondary trading, which is a very popular theme in the public consultation, platforms will be allowed to intermediate transactions of the securities issued through the platform due to concerns regarding information asymmetry. The proposed approach is to allow transactions between investors that have already invested in the securities issued by the company. Finally, I would like to address the flexibilities that we proposed on the draft rule submitted to public consultation. We intend to remove some restrictions regarding the use of proceeds and to allow the overfunding of 20% of the target amount. We understand that the establishment of a target amount is not an exact science, and many factors can influence. Especially in this time of great uncertainty and volatility, such measure can help issuers to conclude their raisings and mitigate some of the uncertainty and risks associated with the public hearing. So I think those are the main aspects that are covered in the public consultation, in this review conducted by the Commission. And I give the floor back to you, Brian.
Yeah, fantastic. Thank you so much for that, Antonio Carlos. And I'm sure we'll revisit some of those points more in depth a little bit further on the conversation. As you said, these changes have been proposed to kind of remove some of the barriers to the growth of this market, as there seem to be some limits in practice. And I just wanted to go back to our international guests briefly and understand from them what they see as the current limits to their respective markets in the UK and the United States. That's kind of limiting their markets to getting to the next stage. Jeff, do you mind if we start with you?
Sure. I think from a regulatory perspective, we've gotten to a pretty good place in the UK, and we're in constant discussions with and dialogue with the FCA, which is our regulator. And over the last few years, it has felt like those discussions have largely been about tweaking around the edges. And there is a lot of tweaking still to do. There is a level of refinement. But, from a domestic perspective, I think, frankly, the onus is on us as platforms now, more than ever, probably always was, but more than ever, to make it work and scale as a commercial proposition. And I think that where I see constraints on growth today are less around sort of the external or exogenous factors like regulation, and more around how good we are at providing performance data, how good are we at facilitating exits, whether through our secondary market or more broadly. Those are the kinds of things that I think, help, or will be the determinants of our ability to sort of continue to proceed up the S-curve from sort of the very early adopters to normalization to sort of, being a completely standard product. But where regulation does become very interesting in a country like the UK and in so many other countries around the world is on the cross-border side. And this is less of an issue in the US and perhaps in Brazil, where you have, very, very large countries and large home markets. But in the UK is a medium-sized market, which is great. But really, the opportunity that we think about in this region is the European one. I mean, the tech ecosystem, the startup world is very pan-European. Obviously, there are a lot of businesses that just focus domestically. But if you look at the venture capital and angel space, you have conferences, or used to have conferences back when we had conferences all across Europe. You had a huge amount of interaction between investors and entrepreneurs. And the important thing from our perspective is that eventually the equity crowdfunding ecosystem comes to mirror that, and it becomes as easy for a German entrepreneur with a Portuguese co-founder to raise money from a British and an Estonian VC, or it becomes easy for them to do it through crowdfunding from investors through crowdfunding platforms as it is to raise from cross-border VCs. We haven't gotten to that point yet. We're able to do very limited cross-border activity today, but there is a new European EU-wide regulation coming into force at the end of next year. And I think that's going to be very transformative for the market. It doesn't apply to the UK, of course, because we've decided for some reason or another to leave the EU. But one of the sort of interesting challenges and opportunities is going to be marrying up the British system with the European system, see whether the British system actually makes some changes to make itself closer to the European system, and then bringing those two together to be able to be really pan-European. So that's kind of where, from a regulatory perspective, at least, we see the next stage of growth and opportunity.
That's great. That's great. Thanks for that perspective. What do you see from your position there in the US?
So there's a few things that I think have inhibited the growth of the market in the United States. I think when we first got started we wanted to have a 5 or 10 million cap on the offering, but we talked to our friends in Silicon Valley to ask them if this would be stepping on their toes, and they let us know that that probably would be. So we reduced the cap down to 1 million, and that's how we came up with that 1 million cap that we marketed to Washington, D.C. Knowing full well that you're limiting the larger companies from leveraging this type of financing because they need much more than $1 million for their businesses. So we're hoping with the changes that are proposed and hopefully will be taking place to increase the cap to 5 million, that will have some larger small businesses coming into the arena. But we also needed to make some other changes that are in the proposed changes coming in. Right now, there was a lot of concern that about what we call a messy cap table, where you've got a ton of investors in there. If the company is going to be sold, you have to communicate that to all the investors. How do you do that very efficiently? How do you get the votes in? How do you make sure everyone's got all the right information? And so what the legislation did not allow was the ability to have what we call special purpose vehicles, which is really just an entity where you group all the investors together. It's got one nominating individual who's tasked with making sure the communication goes to all of them, but that one person represents the voice and the vote of the crowd. And it makes it very easy for follow-on investors, be it private equity or a venture fund that wants to come in, to actually make a follow-on investment in a company, because they're not worried about them having to do all that communication to all the investors. The other thing that I mentioned early on was market awareness. I think one of the things is just that we just don't have yet is the market awareness. One of my friends that works on a lot of legislation in Washington, D.C., she said to me, she goes, I think what you'll see is after 5 years, regulation crowdfunding will hit a tipping point, much like we've got these things called medical savings accounts here in the United States. So you can take money pre-tax and put it into this medical savings account that you can use to pay for your medical expenses, because, you know, we pay for our medical expenses here in the United States. And it's a way for, and so that went from an idea to trillions of dollars. But it took, 5 years before it hit that tipping point. I think we're going to have the same type of thing with Reg CF. The other thing is, and I think Jeff hit on it as well as Antonio Carlos, is investors want to contribute and they want to be part of something, but they also want to know, when am I getting out? Like, what is my exit? What does that look like? So if there's not liquidity built into a marketplace, it's going to be very challenging for investors to get in. In the United States, that liquidity right now is limited to, a sale, a merger, or an IPO. Well, most companies aren't going public these days in the United States because the cost of compliance is ridiculous. But we have these emerging secondary markets that are taking place here in the United States that can be both the crowdfunding platforms or just what we call an alternative trading system, an ATS. And I think the key, so here in the United States, you've got regulation for securities that is both at the federal level and at the state level. So what's interesting is when you do a primary offering of securities and you sell it from company to investors, that first round of offering, that's regulated at the federal level. But the minute one investor that owns a security wants to sell it to another investor, and they're doing it outside of that loop with the overriding company, that's regulated at the state level, because the states are trying to protect the people that reside in their states. And so the states have these rules that require ongoing disclosures for private companies, or you have to have an exemption, and that exemption requires ongoing disclosures. So right now, this secondary market's starting to evolve. What I think the challenge is a lot of the companies, issuers, and investors don't realize that you either have to register your security in each of these states, you have to be part of a national securities manual, which is just the manual of all of the companies that are doing offerings in these states. But in order to be in one of those, you have to do ongoing disclosures. And so we're working on these technologies that enable the companies to actually disclose this information very seamlessly to allow them to do these ongoing these offerings in secondary markets. The last thing I think that I'll throw in there that I think has inhibited the growth in the beginning, but I think is enabling it now, is the lack of supporting technology to enable this market to evolve. And what I mean is, you own a little restaurant or you own a little business in Rio de Janeiro and you want to leverage crowdfunding. okay, this requires that you do things like a video, fill out a campaign page, but quite frankly, it requires that you do offering documents. So a lot of small time entrepreneurs are like, what is an offering document? How do I even do this? So here in the United States, we have these technologies, and I think, Jeff, you probably have this built into your system, but it allows you to put the offering documents together by just answering questions and filling out a form, and it puts these robust offering documents together. The company's called Law Cloud here in the United States. And it's very regulatory compliant, and it works with the platforms. And so this now takes entrepreneurs that don't know how to do this type of capital raising, and it walks them through by holding their hands. And so I think that it was a sticking point early on, but I think it will allow for the evolution. I think with the secondary markets, we have the same thing right now. We've built tools. One of them is called Guard, and it allows these private companies to, on a quarterly basis, file updates with their financials so investors have it, on an annual basis, upload their audit report so it can go through a compliance check and make sure it works across all the states. And I think that's going to really help the industry evolve, as well as the secondary market evolve, as well as help the liquidity. And then we'll just see this mushrooming effect take place in the industry.
That's fantastic, Woody. Thanks so much. There's a lot of interesting points there from both of you in terms of market awareness. I know there's a lot of awareness in the UK. You can see Seeders billboards in the Tube in London and that sort of thing. We hope to get there soon in Sao Paulo here in Brazil. And in terms of secondary market, we definitely think it's very interesting that you guys have come up against this and these new challenges at the size and scale you're at now. And one of the things that we question and consider here is what's the threshold of primary issuance that you really need to get to in which secondary starts to become a relevant thing. I think I'll pass it over to Greg to see what he thinks on this matter and possibly comment on some of the other proposed changes to our specific regulation here in Brazil.
Yeah, sure. Yeah, I'll mention the secondary point, but I'd just like to start saying that, in general, we're lucky enough here in Brazil to already benefit from a regulation that is absolutely world class. It was created, led by the CVM, but a lot of participation from the market and a lot of contributions, and heavily influenced by the UK regulation. So in terms of what's limiting us today, there are points in the regulation, obviously, where we see space for improvements, but the regulation also does not represent a major limit to the development of this market today. In fact, it's been one of the main factors which has helped the growth of this market up until today. That said, one of the big things which has already been brought into the public consultation by the CVM, which we think needs to change, are the round limits. So the current round limit is 5 million reais. Just for Jeff and Woody, sometimes if you translate the reais values into sterling or US dollars, it'll give you a little bit of a misleading picture. A 5 million reais round would not be a company that's at a similar stage of development to a company raising £800,000 in the UK, for example. It would probably be somewhere near a company raising between £2.5 and £5 million in the UK in terms of its maturity, just to give you an idea of that. But what's very interesting is that although very few transactions have actually reached the 5 million limit, the 5 million limit is already a big restriction for us in the market. Because companies that are looking to raise approximately this amount, they're actually looking to raise more. So they're actually looking to raise somewhere, in our experience, between 5 and 20 million in total. So with this still being a new product, which requires a certain level of explanation, and the company has to get comfortable with raising capital in this way, and obviously companies, they're big in a certain way, so they don't take that decision lightly. When we can only offer part of the solution, and then they still have to learn about our model and still have to get comfortable with it, that's a huge commercial disincentive for them to not do their raise via crowdfunding. So I would say that it's not just whether we're doing loads of raises at the limit, which actually shows commercially whether the limit is serving as a restriction today. I actually just responded to one of the comments from Antonio Carlos. We have never seen the current limit on the company's annual revenues as a restriction in the market. In our experience at EqSeed, the companies which have annual revenues of close to 10 million per year, which is the current cap, these companies are looking to raise way, way more than the current round size cap that we've got here, somewhere between 1 and 2 times their annual revenue. So that's never actually been a factor. So we welcome the CVM increasing the limits of the annual revenue for the companies that can raise, but that hasn't been the restricting factor in our personal experience at EqSeed. Yeah, so going back to the original question, what are the things that that limit the growth today and limit continued development today? One of them, as was said previously by Jeff, is simply people having the conhecimento in Portuguese, so knowledge of this model. So we're still at the early adopter stage. We've grown up the early adopter curve to, trying to replicate that S curve as well. And what we find here is that with companies and investors, when they understand what we offer and when they know about EqSeed and this market in general, they think it's fantastic. They're extremely animated about it. They can see how innovative it is and what it brings to Brazil and what it offers on the investor side as a diversified investment product. And we don't have that much difficulty on that side. It's just a case of actually getting in front of people and getting them to know about this model, and obviously educating them in a responsible way through sufficient content. Because the reality is that this product can be, in the long term, a consumer product, but it's not today in Brazil a retail product. So about 70% of the values invested via EqSeed come from qualified investors. So those investors have no limits on the amount that they can invest. And then there are 2 other categories within the CVM regulation. One is for the investors that can, that have financial assets or income above a certain level, and they can invest 10% of that value per year. And then the other limit is for people that don't have assets or income at that level, can only invest 10K. And that smallest class of investors that can only currently invest 10K, 10,000 reais through the platform. At EqSeed, they represent less than 3% of the total values invested via our platform. So this market in Brazil is extremely focused on qualified investors, and currently retail investors are not that large of a part of the model. And that could change in time, but we have to accept that here in Brazil, we don't have a particularly strong culture of investment in variable income. Very low numbers of people register invest via stock exchanges. That number is increasing quickly, but it's still extremely low and just nothing in comparison to the UK and the US. So there are huge steps in terms of culture and in terms of knowledge of the investors around variable income products before they should even be invested in equity crowdfunding. So we want to do that gradually and responsibly over time. Another really important factor to mention in terms of the limit of the growth of the market here in Brazil, this is not actually CVM regulation specific, but it is a legal point, and it's super important. The vast majority of small companies here in Brazil, startup companies, they are sociedade limitada, so that's a limited company structure. And although it's got the name limitada, limited, it actually doesn't limit the risk of the coachistas, the equivalent of shareholders of these companies. Not viable for a Brazilian to invest, especially a small amount, into this company profile. So what that means is that we had to find a structural solution for that to allow capital raising for high potential early stage companies. And the way that we did that was we obliged the companies to turn into a sociedade anônima, so a corporation, at a point in the future. Which is fine for high growth startups with big long-term expansion plans. But also part of the success in the UK and the US markets has been companies, retail products, consumer product, retail, etc. Where these are great companies and they can offer returns for their investors, but they're not going to be unicorns. They're not planning to be unicorns, and they're not, and so. What's happened with the legal restrictions here have pushed the Brazilian market specifically towards one profile of company, And to really expand it, we would need significant reform of the legal structure around limited companies, which is actually, if you trace it to its base, it's actually reform around the leis trabalhistas, so the worker protection laws, which basically can result in judges ignoring the limited responsibility aspect of the limited company. So that's a larger question and something that would really need to be resolved. But without that, you're going to see the Brazilian market continue to focus on a certain type of company, specifically a company that's planning to scale sufficiently to turn into a corporation and be able to give shares to its investors. One interesting point about that is, because of this solution, we've actually made it here, it's completely unnecessary to use an investment vehicle, because with the corporation company, we can actually put our investors straight into the corporation without causing any bureaucratic or cap table issues. So we've actually put, it was 160 physical, so individual investors, into a holding of a company that had already received investment of a fund, and we put them inside that same holding. We've already done that, and then we've already have seen several cases of our companies who have raised via EqSeed and then raised investment via investment funds. So in both directions, the market has proven that funds and even within holdings will comfortably invest alongside equity crowdfunding investors here in Brazil. So that's a fantastic fantastic positive. And so secondary was the other point that Brian has to talk about. As I already said, I consider Brazil still at the stage of early adopters, both in terms of the companies and the investors. And obviously, in the long term, it would be beneficial to have higher level of liquidity for investors, so a secondary market. But it's really important to remember that there's been a total amount of around 120 million reais emitted via equity crowdfunding in Brazil since the beginning. So if you compare that to the UK, for example, and Jeff can correct me if I'm wrong, I believe that Seeders launched their secondary solution when the UK market had done somewhere between £1 and £2 billion of total investment. So that's somewhere between 7 and 14 billion reais of total investment. So with that kind of volume of securities in issuance, you can see how it's possible to start having an active secondary market between the holders of those shares and allowing an increased level of liquidity in what is still a low liquidity asset. But here in Brazil, if we look at the numbers, the ever-growing numbers that Seeders are doing through their secondary market and apply that to the size of the Brazilian market, the result is basically zero. So what we don't want to see today, whilst we're in such an early stage of the development of the market, we don't want to see the wrong profile of investor being attracted to invest in this product in Brazil with the promise of liquidity. Because the reality is that no matter what Antonio Carlos includes in the regulation, and no matter what technology that we apply, there is no possibility of a liquid secondary market in Brazil for at least the next 5 years. In my personal opinion, probably more like 10. So we do want to get there, and it is on our roadmap. But at this point, we haven't built the foundation yet. We don't have a large enough primary market to make it irrelevant, in my opinion. I think that's all the points that I would like to cover, Brian.
Great, thanks for your perspective on that, Greg. I think to wrap up, we'll just have one more question and go around the horn. I think we'd be remiss not to mention the current circumstance of a global crisis, not only from the terms of the standpoint of public health, but also the economic crisis that has subsequently emerged. And so given that backdrop, my next question is what do you gentlemen think can be improved in the regulatory framework of your country, or perhaps commercially, to further boost the development of your respective markets? Jeff, can we start with you?
Yeah, absolutely. I mean, I think we're in a fortunate position in the UK in the sense that we don't really have a huge amount in the way of asks from the regulatory system at this point. The cross-border side of things, obviously, being one component, but I think it has a lot less to do with sort of changes that are needed here. But I do think that that there are a couple of things that we'd love to see, and hopefully we'll see over coming years. One is greater sort of support, participation, partnership, whatever it may be, from existing financial institutions. I think one challenge that equity crowdfunding has had, certainly in the UK, is that no one's really known whether to think of it as an entrepreneur thing or an investor thing. And it sort of slips through the cracks at times in terms of popular perception. The VCs are very friendly to it. I think, we now are at a point where a huge proportion of businesses that raise through seeders either have or will go on to raise venture capital. It's a collaborative environment, but it's seen as something quite different from what they do. And then on the investment side, the retail investment, I think people still don't have enough of a sense of what this is as a proposition for financial seeking investors. People think of it a lot about sort of backing businesses that you want to support and be part of that, and that's all great. But the financial proposition. So I think there is an evolution, and this isn't something that's the responsibility of financial institutions, responsibility of us. It's a mix of things, but I think that there is an evolution that needs to take place in coming years to sort of put equity crowdfunding more squarely, both within the sort of tech entrepreneurship ecosystem and more squarely within the investment landscape. So I think that's certainly one key part of it. Look, I think the other thing, and this I will, I'll use this chance to refer to a couple of things that were said earlier. When it comes to things like the size of rounds and the number, the revenues of the companies that are raising, one of the peculiar things we've come up against this, we came up against this in our European conversations a bunch, is that it's very difficult to know what a market would be if the regulation and the rest of the environment allowed for it. I mean, our European conversations, there was a discussion between whether the threshold, the cap would be €1 million, 5 million euros, or 8 million euros. And the commission asked us to provide examples of people wanting to raise 8 million euros. And we said, well, we can't provide it because it's not legal at the moment. Nobody allows 8 million euros. So how are we going to demonstrate that this thing exists? But we can tell you from our conversations and from what we've seen out there that that there would be demand and that part would grow if you had it broader. Now, obviously, there has to be some limit. Fundamentally, equity crowdfunding is not the public markets, and there's going to be some threshold. But it's very difficult, I think, to place limitations on the basis of what activity is existing. And I will say, and I thought the comments about sort of revenue thresholds are very interesting, because I think that in the first instance, it may seem like equity crowdfunding's main application or sole application is to really rather small businesses that are far from the revenue threshold. But we don't have a revenue threshold here. And as a consequence, one of the things that we've seen evolve over the last few years is some really quite significant size companies raising a portion of their capital through us because they want the buy-in from their investors and their customers. They want to give often their customers and community the opportunity to invest in them. And so it is a partially financially motivated, but also partially commercially motivated thing. And if we had a revenue threshold, we would be, we wouldn't have been able to work with those companies. So that's all. Those are just sort of two examples, I think, of a general point, which is to say, it's important to think big. It's important to think from an expansionist perspective. This form of fundraising has the opportunity to really be vast, have a vast impact on businesses and on investors. And it's, the old Wayne Gretzky quote, you skate to where the puck's going to be, not where it is now. Thinking in terms of where's the opportunity and how do we build an ecosystem, regulatory framework, but a broader ecosystem that capitalizes on the full potential of this form of financing, I think is important in the UK, in Europe, in the US, in Brazil, and beyond.
Thank you so much, Jeff. Love that Wayne Gretzky quote. Woody, what do you think? What's your perspective on this?
So we're in a crisis right now. COVID's affected the world. 40 million Americans are furloughed, most likely going to be turned into fully unemployed. It's a crisis. I mean, we are at a tipping point right now. We have money, a $600 weekly amount that ran out on the 31st of July. Our government is debating another stimulus package. So they're tossing around a bunch of ideas about how we can re-employ all these Americans. So I went to Washington with my friends that we worked on this legislation with, and we proposed two things that, once again, the UK is doing right. So the UK's got this thing called the Future Fund, and it's really a co-investment vehicle that allows the crowd, or the I should say the issuers of these companies, to benefit both from the crowd and government finance. And so where they raise money from the crowd, the Future Fund can come in, and I don't know if it's a 1-for-1, but they come in and they co-invest alongside the crowd. What we were saying to our legislators in Washington, D.C. is we need this sort of co-investment vehicle whereby the government can not pick winners. That's not what we're trying to do, but say, there's these businesses in these communities. By the way, there's over 450 industries that are represented in companies that are raising money online in America. So it's not just high tech, it's not just restaurants, it's a broad spectrum. So you can see there's both issuers that need the money as well as investors that have an appetite for all of these type of investments. If we can get the government to create this co-investment vehicle, and we've proposed an incredibly lofty figure of $20 billion, because, hey, our government's throwing around trillions, why not just carve out 20 billion? It would transform the industry. It would change the perception of what's happening. It would re-engage these retail investors. And then, so that's one side of the equation. The other thing that the UK is doing right is these tax credits. There's incentives for investors to come into the marketplace because they can either write off the investments, they can write it off if the government goes under, they can write off their investments or take a credit for the amount that they put in on their taxes each year. I think that type of stuff de-risks it. Jeff was talking about that at the beginning. For these investors, we don't have that same type of structure here in the United States, but if you add those two things into the equation here, I think it transforms the perception of the marketplace. And it de-risks it in the sense that we'll get more people involved. Not that there haven't been many people. There's, I think we're approaching 600,000 investors in total here that have invested in these companies in the United States. And it's a little different, I think, than Brazil. About 80% of the investors that invest in these businesses in the United States are your retail, sort of your non-rich, non-accredited type investors, your average Joe. 20% of them are the accredited rich investor. However, it's a converse thing when you look at the capital. 80% of the capital comes from those 20% of accredited investors, but this allows that huge swarm of the crowd to come in and risk only, on average about between $700 and $1,000 in each of these deals. So I think if we can change I add on these components to an industry that's already evolving. We've had over 70 platforms register with the SEC here in the United States. It will transform it and live up to the potential that Jeff was talking about, not only for the UK, but for the US and globally as well.
Great, thank you so much, Woody. Greg, would you like to weigh in from your perspective from Brazil?
Yeah, absolutely. Thank you, Brian. So yeah, in terms of what can be changed here, from a regulatory perspective, to really, push on the growth of the market. I think firstly, it's fantastic that we've had, after only 3 years after the development, the publication of the regulation, we've already had a new public consultation from the CBM proposing to increase the limits. That's a fantastic start, and it shows the way that the market has grown in a responsible and robust way. The CBM is looking to do this. So there's a few points I'm going to mention where we've suggested changes to the CBM position, but in reality, we actually support most of the proposals that were brought in. We find most of them extremely positive for the continued development of the market here. The first point I would mention, which I already touched on a little bit, is the current limit of 5 million. And the proposal of the CBM was to take this limit to 10 million. So from our experience in the market here in Brazil, we believe that limit should be 20 million. And why is that? Because 20 million reais is where we see the start of the active venture capital, both of Brazilian VCs and foreign VCs, investing in Brazilian Series A rounds. So I'd say a Brazilian Series A round is approximately 20 million reais. So the problem with a limit of 10 million is twofold. Firstly, it leaves a gap between the equity crowdfunding market up to 10 million and the VC market, which really gets going from 20 million. That would be the first. And then secondly, commercially for the equity crowdfunding market, there aren't actually many companies looking to raise 10 million. It's not a general phase in the capital raising here. They kind of jump from 3 to 5 to 15 to 20. So with a limit of 10, we're going to find ourselves with the same problem that I explained before, which is we can only offer the right companies and the best companies, you know, talking about larger round tier companies with really high potential. We'd only be able to offer part of their solution. And again, that's a huge commercial challenge for them to accept the equity crowdfunding model when it can't even do the full size of the round that we're looking at. So we believe that without changing the risk to investors and without changing the essence and the principles behind the regulation, that the limit can, within the current regulation, can simply be taken to 20 million today, and that will close what we see as the biggest and most important gap in the access to capital here in Brazil today. So that's the first change that we proposed in our response to the CVM's public consultation. So the second point is about the formal register of the securities, which is known as Instrução in Portuguese. So we, in principle, we fully support the introduction of a formal register of securities that are emitted via the equity crowdfunding platform. We understand that this is absolutely fundamental for two reasons. Firstly, to ensure that the securities that are emitted by the platforms actually exist. Via the platform, so emitted by the companies via the platforms, to ensure that these securities exist. And secondly, it's an important foundation for a secondary market, in that this formal register will control who actually owns those securities. So we support the implementation of this formal register for those reasons, but we don't support the way that the CVM proposed to do it. And the reason for that is that basically the proposal was a simple carve out within the existing regulation for Instrução, formal registers, which would allow us to perform the function. But if you read in more detail about the actual regulation, which is CVM 543, the requirements are so heavy and were so clearly thought of, thinking about financial institutions and thinking about huge transaction volumes of highly liquid assets, that we just find those rules completely disproportional to our reality today. So our proposal to the CVM in our response to the public consultation was, yes, there should be a formal register, but there needs to be a simplified version of that, which is the correct size to be proportional to our market today. Because, you know, we're, as I said, we're addressing two key issues. But in terms of the secondary market, we may be building the foundations today, but we're not going to build that building for a good few years to come. So it seems overly onerous to put large register requirements on the platform today, when the size of our secondary market in the next 5 years is going to be so small, simply because our primary market still has a lot of growth to do before we even get there. And the third point that we found as really key, and I'm actually going to separate this into, we sent two separate considerations to the CVM. So one being related specifically to the COVID crisis and what we could potentially do as an emergency measure to help the market in this moment. And then the second is just in general, a change that could be made to add a bit more flexibility to the regulation and to allow more companies to successfully raise capital through this model. So in the current CVM regulations, there is a limit or a minimum actually. So the round has a maximum size, a maximum target size, and it can have also a minimum target size, but that minimum must be at least 2/3 of the maximum. In normal times, we didn't really have much problem with this limit at all, because obviously companies with growth plans, so they're looking to raise a certain amount, and the logic of the limit of this minimum is that if they don't raise a certain amount of money in total, they're not going to be able to implement their growth plans, and therefore what was proposed to investors has fundamentally changed. And I think that logic still holds in general. But the two considerations that we would bring would be the following. During this COVID period, we have seen the opportunity to do emergency funding rounds, basically, for companies that have received investment through the platform before and other companies. But these companies were very uncomfortable with a couple of things. Firstly, launching a larger round and not achieving the minimum, and the message that this could pass in the current situation was a big consideration. And then secondly, the companies, using it as an example, a company that raised 2 million of equity last year is not comfortable in opening an equity raise to look for 400,000 because they see this as a very negative signal to the market, and that they are perhaps not no longer trying to achieve the kind of aggressive growth which is necessary to bring returns to their investors. So whether that's right or wrong, I'm not sure that I agree with that, but that is a real feedback that we've been getting from entrepreneurs here. So what we suggested to the CVM in temporary terms would be to look at simply abolishing the minimum rule or significantly reducing the minimum rule temporarily whilst the new regulation is developed. So whilst the CVM considers the responses to the public consultation and eventually publishes the new revised version of the regulation. And then secondly, within the new revised regulation, what we would like to see is, we support maintaining this rule of 2/3, but we'd like to see it reduced to 50% of the round size. And especially so when we're now considering larger rounds. So we think it's reasonable for a company to open an online raise looking for between 10 and 20 million reais. We just think that's reasonable and consistent with the kind of practices and numbers that we see very frequently in the traditional market and offline. So those are three of the main points that we've included in our response to Antonio Carlos and the CVM. I hope there weren't any surprises there. Obviously, we've already submitted our documents, so just what has already been sent over. And as always, we're extremely happy to have the opportunity to participate in the public consultation. And also, we know from experience quality of the analysis that the CVM will do now in this period before publication of the regulation. So just for Jeff and Woody, when we went through our first public consultation in 2016, when the CVM published the regulation in 2017, they also published every single response and their response to every single response received, which is an incredibly transparent and productive way for the regulator to operate. We're incredibly lucky to have Antonio Carlos and CVM that we have to work together on this process of developing the regulation to support the growth.
Thanks, Greg. Thanks. There are a lot of points there. Antonio Carlos, I'd definitely like to give you the opportunity to comment on, there's been a lot said here today. We're getting close to wrapping up. If you wanted to contribute anything or from the CVM's perspective, and we have had a lot of questions from the viewers. We're not going to have time to comment on all of them, but one of them that is recurring is when will the modifications to the current regs be finalized and published, or if we could get your point of view on that as well.
Thank you, Brian. I'm very grateful to be here and listen to all those great perspectives and how the market has been evolving in the UK and the US. Both countries are always benchmarks for us and the regulation that we develop here. Our perspective is to enact the rule in the beginning of 2021. We have been assessing your emergency requests, if I may say, like this, and it will be deliberated by our board next week. So maybe we will have that relief in terms of a temporary measure in order to give a response to the whole COVID situation. But the rule itself, it probably will be enacted in the first trimester of 2021. You know that we will now start a very thorough examination assessment of the contributions received in the public hearing. I would like again to recognize how much this topic raises the interest of numerous stakeholders in Brazil. It is incredible. We get much more comments on the crowdfunding public consultation that other traditional issues that we regulate. It is amazing. So again, we received a large number of comments in our public consultation, and we hope to come with the best design for the market to continue growing. And I agree with Greg when he says that it is a work that is conducted with you guys, with the market. So the CVM takes this opportunity to interact with the market very seriously. In my opinion, we always improve our rules by accepting the suggestions received by the participants. And I don't see how it can be different in this situation. I know that some stakeholders might have been disappointed with the limits that we proposed, as Greg said. But again, it's only the public hearing who will assess the contributions deeply. And that's it.
That's great. Thank you, Antonio Carlos, again. Yeah, thanks. So I was just to wrap up, there's another question that's been a recurrent theme. So I'll pass this one around the horn, and then also it's an opportunity for all you guys to give any of your final remarks and considerations. But one of the recurrent questions from our viewers is, what are the average round sizes that are currently being raised in the respective markets? And if you'd like to mention any other numbers that you find relevant in terms of total amount raised or amount raised in 2019. And then again, thank you so much for joining us. And if you'd like to give any closing remarks, feel free. Jeff, I think we can start with you.
Sure. Yeah. I mean, in the UK, I don't know. The average deal size is probably somewhere between about £400,000 and £500,000 per deal. You know, that ranges, though. We see deals down at sort of £50,000 to £100,000 all the way up to 5 million plus. You know, it's a real kind of mix. I mean, on Cedars, we did 250 deals last year until 2019. We'll do probably about 300 plus this year. So you kind of get a sense of the basic scale of where it is. But I mean, I think the key point is it is a moving number. It is growing significantly. And so we are, you know, we are continuing to see sort of expansion of the market, and that is a focus. In terms of closing remarks, I mean, all I would say is, you know, I think, you know, it sounds like in Brazil you are blessed with an engaged and forward-thinking regulator like we have in the UK, which is fantastic. I do think this is very much, you know, works very well when you have a collaborative and open process between the two. You know, this is, you know, a form of financing that, as I say, I think is fantastically important to small businesses, fantastically important to investors. Obviously, there's a need to protect investors. There's a need to protect against fraud, and trying to get that balance right is an art form. And I think, you know, the more conversations like this and others that are had, the closer you get. So I wish everybody in Brazil the best of luck as you get to the next stage of the regulation, and also as you get to the next stage of growing the market. It's fantastic to see, and I will be cheering you on from overseas.
Thank you so much, Jeff. It's been a real pleasure and honor to have you here. Woody, over to you.
Okay, so let me just switch over to look at my data while I'm talking right now. The average round size in the US right now is right around 250,000. Let me just put that in a little perspective for you in terms of the US market. We have this thing which exists globally. It's not just in the United States, but it's called the Valley of Death. And it's the point at which you can fund your own business up to a certain point at which you need external financing. But then there's this valley where you have to figure out what you're going to do before angels, VCs, private equity can come in. And in the United States and in many places around the world, that valley of death starts at 25,000. So people can use up to $25,000 of their own savings, credit cards, line of credits, whatever that they have available before they need external financing. and they have to fund it up to 250,000 before they can qualify, before angels or VCs are really interested in putting money in. And so when I tell you that that 250,000 is about the average amount that's being raised, the important point about that is we've now solved for the valley of death. And so I think that's a really critical thing that we like to point out all the time is it was a barrier before. This seems to be working, and so I think we need to encourage it. In terms of what's happening with the market, just in the first 3 months of this fiscal year, we have almost 60 million committed. So if you just multiply that by 4, and I think it'll be greater than that, that's 240 million. Last year, there was 130 million. So you can see that we are really almost doubling what we're doing year over year. I wouldn't be surprised if it doubles. In terms of just the number of companies that are becoming in and the individual backers, you know, last year, what did we have for backers? We had 240, essentially 250,000 backers in these private companies. So I just looked at numbers. So far in the first 3 months, there's been 107,000. So we're going to blow away the number of people that are interested in doing this. So you could see the broad appeal again to what's happening. I think just to reiterate, you know, and repeat a lot of what Jeff has said, which I seem to have enjoyed doing this entire time, is the fact that this is a whole new asset class. This is a whole new market. This is taking what it currently exists in terms of how companies have always raised money, in terms of how bigger companies currently raise money, and applying it to startups and small businesses. Globally, we've seen ways in which we can have prescriptive or non-prescriptive approaches to coming up with regulation. But at the end of the day, this is all about helping stimulate not macro economies, but local economies. Because when we invest in these local businesses, what we're doing is we're investing in local jobs. We're investing in local expenditures for these businesses that that need products and services from local vendors. And so all we're doing is creating a stimulus for local communities that doesn't otherwise exist, because it's very hard. And I think globally, it's very hard to go into a bank and get a loan because they've got all these covenants that you need to have or requirements that you need to have in place. And it doesn't have to be that way with this type of financing where you actually know the people that would be your investors. So anything that we can do to help further this, I think helps these. And by the way, I think to the COVID crisis, yes, we've got these macroeconomic crises at our hands, but they all come down to what's happening in these local communities. So anything that we can be doing at this point to be helping stimulate businesses that, quite frankly, we need to return after this pandemic is gone to have any sense of normalcy in our life is going to be a very critically important thing. Because I know personally, I'm not going to be happy if I can't get my pizza down the street from my favorite pizza joint after this pandemic's over. So, you know, that's where I'm focused. And I'm excited that this exists. And I think the future bodes well for all of us if we, you know, continue to push this forward.
Fantastic. Thank you so much, Woody. It's been a real pleasure and honor to have you on as well. I think what you mentioned about the Valley of Death really resonates with us here in Brazil. Believe it or not, when we started, the Valley of Death began at around 300,000 reais. That's when funding really fell off for startup companies here after acceleration and government programs. And one of the chief successes that we've been able to help contribute and bring to the market here with our success is now we've pushed that out further. Companies can reliably depend on financing through EqSeed of up to 1, 2, 3 million reais, and that's a real difference from a few years ago when we first started. But I'll let Greg sum up a few more of the other points, and then we'll wrap it up.
Yeah, perfect. Thank you, Brian. So yeah, we started in 2015 with raises of 300,000 reais, 250,000 reais, which was the first point where we saw this gap in the chain of access to capital. So you had companies coming out of acceleration programs and incubation programs within universities, and they've received perhaps 150,000 reais. They've grown to a certain level, and then they couldn't receive capital sufficient to take the company forward. So they're in conversations with individual angels, for example, but very, very few angel investors active in the market looking to put in kind of ticket between 300,000 and 600,000 actually these companies were looking for. And then over time, and with the introduction of the regulation in 2007, we've gradually grown the round sizes. So today, EqSeed, we work with rounds still from 250,000 reais minimum, but we now work up to the maximum of 5 million. The largest that we've completed to date has been a round of 4 million reais. Since the beginning of our operations, has been over 33 million invested via the platform. So the total size of the Brazilian market of equity crowdfunding, including the imobiliário, so including the property development part, is around 120 million. So we represent a little bit more than a quarter of the total market since the beginning. And then in 2019, there was around 60 million invested in the market in total, and EqSeed did around 14 million of that, so just under a quarter of the total market in 2019. And with the growth of the size of the rounds, we've seen our average deal size in 2019, it got to 1.7 million reais, which, to be honest, even broke our own expectations. And we actually expect that as we now focus on greater volume as well in the coming years, we actually expect that average to fall down here. So it might be a little bit misleading, misleadingly high, that average. Those are the key numbers from Brazil. I'd just like to take the chance as well to do my own personal thanks. Firstly to Antonio Carlos for your participation, and obviously all of the engagement and everything throughout this development of regulation and market here. To Woody, who I had the pleasure of meeting almost by chance here in Rio, and sat over the other side of a table and began talking and realised that we should definitely be talking more, given the similarities and shared interests. So that was a real pleasure, and Woody was kind enough to actually contribute to the first CVM public consultation in 2016, bringing the opinions of crowdfunding capital advisors from the US, and that was a fundamental input for the CVM in the development of the regulation. So I thank you for all of the help that you provided us during these last years, Woody, as well as your participation today. And finally for Jeff, Jeff, for me it's an incredible pleasure to be on time with you today. Your business, not only the numbers and the growth, but the way, the transparent, responsible, professional way that you went about developing Seeders actually inspired me to leave my career in investment banking and to dedicate my life to this business model and to implement that in Brazil. So I thank you for that, and I'm eternally grateful for that, as well as the fact of you being kind enough to have invited me to your offices and spoken to me at the time when I was beginning to build this company. So I thank you. My bank balance perhaps doesn't thank you yet, but maybe in a few years it will. But really, it's a huge pleasure, and I really thank you for participating in this event today and sharing your opinions, which have been incredibly valuable for all of us, and I hope for everybody listening at home as well.
Well, gentlemen, we're a little bit over time. Again, I really reiterate Greg's thanks to you all for joining us. It's been a privilege. We've been so fortunate to have such leaders and instrumental figures, pioneers really, in the development of this market worldwide. A real privilege, and we really thank you very much for joining us. And I would just invite all those that are listening to imagine what Brazil would be like, not only in terms of access to capital for entrepreneurs, but also for access to this type of investment for investors and the economy as a whole, if we do indeed manage to replicate the success abroad and grow this market 20x in 2 or 3 years, or even 120x in 5 to 10 years. I think it's an interesting thought to leave on. And again, gentlemen, thank you so much. And we'll sign off here.
Thanks, everyone. Appreciate it.
Thank you.
Thank you. Bye-bye.
Thanks, everybody. Goodbye.